Are you an NFT seller or artist? You may be surprised to learn that NFTs have sales taxes applicable to them in several states. The problem is most people are unaware of this and are failing to properly collect and remit sales taxes. This is creating a huge risk to each company that has this problem, as well as the NFT industry as a whole. This problem is further compounded by the fact that many states have stated that these taxes can be applied retroactively, meaning that they can apply sales taxes for sales that you completed in prior years. So this is a huge task risk for companies, and that's what we're going to be covering in this video is when do sales taxes apply to your NFT sales, and when do you need to be concerned with retroactive taxes, and how can we address this issue and deal with it appropriately? So what are sales taxes? Sales taxes are a tax that's collected at the point of sale. It's usually collected by the seller at the point of sale, and the sales taxes is quoted as a percentage of the overall sale. The exact sales tax rate can vary state to state and jurisdiction to jurisdiction. So we've seen several states, including Pennsylvania, Washington, along with many other states, already state that NFT taxes can be applied retroactively. The reason why they're able to apply these taxes retroactively is because the NFT tax laws that they've given guidance on recently are interpretations of existing laws that were already on the books in regards to how digital goods are taxed in those respective states. So this means that even though guidance has came out recently, their interpretation of these laws is that NFTs have been exposed to taxes this whole time. So basically what that means is that if you've sold NFTs in prior years and you have a nexus within states that are going to pursue retroactive enforcement, there's a very large tax risk, because if you weren't collecting sales taxes appropriately in those prior years and the state comes back for those sales taxes to be remitted to them, that can be a very large bill on your end for your company. Additionally, it's going to be an unexpected bill. So this can hurt you from a cash flow perspective, and obviously it's going to create very large compliance headaches dealing with the state taxation agencies. So that's the number one thing, is that these states can apply these taxes retroactively because they're interpretations of existing sales tax laws. They're not new laws. So this is going to create a huge tax risk for anyone that sold NFTs in the past or is going to sell NFTs in this current time frame or in the future, but is still not going to collect and remit sales taxes. Additionally, outside of the tax risk and the cash flow risk associated with this, there's the reputation aspect. If there starts to be headlines coming out where your company isn't collecting and remitting sales taxes and paying their fair share of taxes, or if this is just an industry-wide narrative that starts to take hold in the media saying, NFT sellers industry-wide aren't properly collecting sales taxes, this is going to hurt the reputation of your company or the industry as a whole, which again is going to have an overall negative impact for you as a business owner. Lastly, in addition to sales taxes, what we also need to consider is use taxes. Use taxes and sales taxes go hand in hand. In most states where sales taxes should have been collected and they weren't collected, the purchaser should be remitting use taxes on their tax return in the equivalent rate to the sales taxes. So if you were selling NFTs to one of your customers and you weren't properly collecting sales taxes, not only can the state possibly come after you as the seller, but they may also come after the individual that you sold to for use taxes. Now this can create a very bad scenario if your customers start having tax issues because they purchased NFTs on your platform. So these are all compliance issues that are going to be coming from this retroactive nature of NFT sales tax enforcement and the overall fact that most people are not currently compliant. So what should you do as a business owner? Get into compliance as soon as possible. So how can you get into sales tax compliance as an NFT seller? This is probably the most important question that you can be asking yourself if you want to protect your bottom line. There are unique challenges to people that are selling NFTs or accepting crypto as a form of payment that want to get into sales tax compliance. Number one is that you're going to need to collect your customers' address information at the point of sale. Now, for prior sales, when we're dealing with these retroactive issues, depending on which state you're in, we may take an alternative approach depending on the sourcing hierarchy for that specific state to determine where those past sales should be sourced. But best practices is that you should be collecting your customer's address at the point of sale, and that will enable you to determine where your customer's location is, which in almost every state is going to factor into how we're sourcing the sale and what sales tax rates are actually going to apply to the sale. So step number one is that we need to properly collect your customer's information, and then, based off of your customer's location and your business's location, we can start to determine proper nexus and proper sourcing for that sale and apply the correct tax rate to the sale. So that's number one, is that we need to collect the address. Number two is you need to collect the sales taxes on top of whatever your sales price is for the NFT or the good that you're selling. This is going to eliminate the whole issue I was outlining when we're dealing with retroactive taxes in scenarios where you're not collecting sales taxes and then you owe sales taxes and it hurts you from a cash flow perspective. If we're collecting sales taxes up front, this isn't going to impact your bottom line and you're going to remain in compliance with the state. One nuance is, though, when you're selling an NFT or you're selling any good in exchange for cryptocurrency, we're going to want to calculate the sales tax rate and collect that sales tax in the native cryptocurrency that you're selling the NFT good or service in. So if you're selling an NFT for Ethereum, we want to calculate the sales tax, the overall sales tax amount as a percentage of the sale in terms of Ethereum based off of the fair market value on that date, and that's what we want to collect from your customer. So that's the other important part, is making sure that we're not only calculating the correct sales tax rate from a sourcing and nexus perspective, but that we also calculate that correctly in your native cryptocurrency. So we're making sure that this transaction is as smooth as possible for your customers, but that you're also collecting this sales tax amount. Now, the final part is that on the back end, you're going to need to capture this sales data from the blockchain with all the transaction details that we can get from there, but also from your point of sale with the sales taxes collected, your customer's address and all of that associated information. We're going to need to collect all that information, save it for our tax documentation, and then use it on a monthly, quarterly, yearly basis for sales tax reporting and remittance as appropriate on a state-to-state basis. So, those are the three steps. Is we need to be collecting your customer's address information up front, calculating and collecting the right amount of sales tax data, and then making sure on the back end that we're collecting all of this information and saving it so we can report it appropriately to the applicable sales tax agencies. Now, me and my team at Digital Impost have been on top of this NFT sales tax issue since it's been a problem. And we've been tracking the developments from when the first state has announced guidance related to NFT sales taxes up through the current period. And we've actually built a automated solution to accommodate this whole process, from collecting your customer's address information at the point of sale to calculating and collecting the right amount of sales taxes in the native cryptocurrency that you're selling in, to automating or to collecting all the information on the back end for tax reporting purposes, and then actually automating those tax filings. That is the solution that we provide at Digital Impost. So if you're an NFT seller that either is concerned with retroactive taxes that we may need to take a look at and address, or you're planning future sales that you want to be in compliance for, Digital Impost is your end-to-end solution for automated sales tax compliance for digital assets.